Paul, let's get after one more company. I mean, we have more companies. We're going to do one right now. This is SciPlay. The ticker symbol is SCPL. What do you know about this?
I know nothing about them.
I knew that.
Frankly, it doesn't matter.
SciPlay, let's go.
They hit a low of $6 in March, and now they're at 20.
$20.
$462 million market cap. 23 PE, X. Oh boy, PE is very low, 3.8%, but a high gross margin. So this tells me that maybe something happened here that had a big drop for them for the year because they had this big of a gross margin and this low of a profit margin. This is part of what makes sense for me in business. I immediately see this and go, wait a second, why is the gross margin so high and the overall profit margin so low? This isn't real estate.
So the PE is an X and the profit margin is showing low at the moment, huh?
Correct.
Double X, okay. Revenue growth over the past 5 years.
Okay, there isn't even a lot of data here.
Okay.
They've only had 3 years of data. 302, 548. So check mark there.
That seems pretty good. How about profit growth is pillar number 4, Paul?
Profit growth. 20.3 to 20.9. Barely a check mark there.
A little check mark, okay.
A little check mark.
Number of shares outstanding is pillar number 5.
Awful. 66 million to 91 million. X. They're diluting the heck out of people.
Uh-oh.
That's bad. I mean, that alone, it just makes me, like, with all the other numbers, I mean, usually at this point, I'd be like, bleh.
Pillar number 6 is current assets over current liabilities.
266 million in cash versus 42 million in current liabilities, 124 overall. They have $140 million extra, so their market cap of 440 actually becomes 300, and it drives their PE down quite a bit, but not enough still. So let's keep going.
Okay, so that's a big check for current assets, though. Paul, let me check my numbers, though. I had a market cap of 462.
Yeah.
How much do they have in the bank there?
140 net, so it's about 320 overall as the market cap, as a net market cap when you pay off all their debts.
Now their PE was only 23, right, Paul? You think it might get us under?
Oh, was it only 23?
I thought so. Maybe I'm lying.
No, you might be right actually.
Is it?
Oh yeah, you're right.
Okay,
oh, so it gets us under.
It might get us on. Okay.
No, it does get us under.
Oh, it does. Okay, so
it takes us down to probably 16 or 17. Okay, not bad.
So in general, their profit margin is awkwardly low, and they're selling off shares. Free cash flow growth is pillar number 7.
42, 157. Check mark.
Good.
Guys, just in the last 157, they're selling for roughly 2 times free cash flow because the actual market cap is around 320. So they're about 2 times free cash flow. So something tells me this is a very, hey Don, what does this company do?
If you guys have any insight out there, let us know what we might be missing on this company. Uncle Don, what do you think?
Hold on.
Jesus Christ, Seth, relax.
Wasn't ready. I can only type so fast.
Yeah, he's getting snippy.
I didn't get snippy. You want Care Bear? I ain't that person.
Care Bear.
That was a great
Don,
show.
you know by saying that I'm going to put your head on a Care Bear
That's
the next
fine.
Photoshop I open up. So. Okay.
SciPlay engages in development and publishing of digital games on mobile and web platforms. It offers social casino games that include Jackpot, Party Casino, Goldfish Casino, Hot Shot Casino, Quick Hit Slots, and casual games that include Monopoly Slots, Bingo Showdown. So really focused around the gambling aspect without probably putting too much money of your own unless you want to buy their in-game currency.
Interesting. Paul, what are you reading over there?
I mean, just this is the Y chart's explanation of what they're doing. I mean, I don't know. I just, it's a tough one because it seems really small. It's very niche, and I always get apprehensive about gaming because of how the government can just come in and go, poop. With that said, a lot of casinos generate other income. This might be a good acquisition, and 2 times free cash flow ain't bad. Now, I wonder if the free cash flow is sustainable for long periods of time.
Why don't we look at Mo? What do you got in terms of momentum, Trader Mo? What do you got in terms of SciPlay?
So this is an interesting company. It made a pretty nice run up from beginning of December. And I don't know what happened last week, but they did have some kind of gap up right here. Maybe that was earnings. Maybe you guys know what it was. But if it's me, I'm not touching this company just because it's kind of up and down right now. It's back and forth. Let's let things settle down. For a stock to have a sweet spot reversal, so 80%, 32%, the trend reversing so high up there, it's a very risky trade to make. There's better companies that you could find out there. There's thousands of companies. Go pick another one.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.